Hello everyone, I hope you guys are having a good new year. Today is January 4th. I am providing you guys an update with some market analysis and a brief explanation of where we are. So with that, I'll jump right into it. So the first thing I want to talk about is Bitcoin. Bitcoin leads the market because Bitcoin was the very first cryptocurrency created and it stayed alive this whole time. It leads the market the way the US dollar leads all the world currencies. Here on the graph, we have displayed market cycles of Bitcoin with what's called Fibonacci candles. The Fibonacci candles, they just combine price and give it an easy up or down. If you take the three cycles and break them up, this was 2012, this was the rise here, this was 2016, this was the bull market here, this is 2020, this is the bull market here, and here we are again in 2024, 4 years later. This picture was actually made about 2 months ago, so we're a little bit actually farther into this. Now what we're going to look at is a regular chart of Bitcoin. So we had the first cycle, second cycle, third cycle, waiting for fourth cycle. That first graph is Bitcoin regular. If we take and spread the numbers out logarithmically, then the Bitcoin graph looks like that. So that's normal. That is what it looks like. But if you spread it out Fibonacci, then that's what Bitcoin looks like. So for this demonstration, I'm showing you that we're going to take price from here. We're going to do it logarithmically. And then we're also going to now put it on what's called a rainbow chart. So this rainbow chart is showing the market cycles here. And this is what's called the Bitcoin halving. So these lines here are when the Bitcoin algorithm gives the miners half as much Bitcoin for mining. So these are pretty important in the crypto cycles. In between the cycles is where you get the price movements. Run up and come down, and run up and come down. Run up and come down. But with this cycle here, because I trade foreign exchange, I've learned that the Fibonacci sequence is pretty important to how the finance markets work. And by applying the Fibonacci sequence to this graph, my expectations was if you take the peak here and you take the peak here, this peak is in between this distance. This peak is about a quarter of the way. This one is about a third of the way. If you take a quarter and a third and you add it together, you get almost 3/4-ish around over here. This is where I thought the top of the bull run was going to be. As you can see, that did not happen, and we ranged this entire time. The interesting part is when this market ran early, this was unexpected here. We expected to stay lower and run up later. It ran early, pulled everybody out, and it held here when it Fibonacci should be here. In trading, we call that a Judas swing. So it should be up here, it's not. And from this point on, this is actually a whole new market cycle that's running up. So there's a good possibility that this market could be all the way up here before we even close, being just a Judas swing to this actual connection. That will give clear distinction that that was a Fibonacci extension to the market. And when everybody else is waiting for this market to be bullish here, like it's always been, it actually may be actually all the way coming down into another bear market here. So if the market runs early, this is great. If the market holds itself and crypto decides to keep this 4-year cycle, then this is coming as well. So these are 4-year spans. So this is about a year's worth of time. So we're about, this is about April of this year, and we've got a little bit longer to go. So I already talked about the Fibonacci sequence before, but I'll kind of explain it here. The Fibonacci sequence is just a theory of adding numbers together, which represent the way nature and life tends to grow numerically. So if you have 1 and then you have 1 and you add it together, you get 2. If you take the 2 you have and add the previous 1, then you get 3. If you take the 3 you have and add the previous 2, you get 5, and so on and so forth. So you can actually start Fibonacci anywhere. You're just always adding 2 numbers and then getting the new one and then adding the previous number to make a new one, and that's called the Fibonacci sequence. This is seen all throughout nature and in the financial markets. So this Fibonacci sequence is the underlying mathematical structure that I use in order to map these price extensions. So in order now to use this theory and apply it on a chart, I'm going to actually take one of the lowest 2 measurements that I can of a candle and plot them, and then use a script in order to keep adding the next number to itself. So this is Bitcoin starting at 5 cents. The next ticket moved from there was 6 cents. I take those 2 together and add it, and then I'm projecting this forward. This is going to give me a financial theoretical range that I'm working with in order to accurately measure the chart. In this one, you will see I have all the ones for XRP. This is the video showing the 2 lines on Bitcoin that I used. And then these are all those lines plotted on Bitcoin. I will explain them to you in a minute, what they are used for, but that's those lines that I made on the previous Excel sheets now plotted on here. So the way that I use these lines is because when the market moves up, the chances of it moving up farther are dictated by where it's been. So the expansion of a number has everything to do from where it's been. So by tracking it from the bottom of the chart and then growing these numbers up, in theory, each space of number is the same relativity to each other. Even though right here you have 21 and 34, well, the difference between 21 and 34 is less than 34 and 55. It doesn't look like it on this chart because we're using a logarithmic chart that shows you the graph Fibonacci. That's looking at it regular. That's looking at it Fibonacci. That's looking at it regular. That's looking at it Fibonacci. So the way I use these levels and why I'm showing you this on Bitcoin is because Bitcoin leads the market, and what Bitcoin has done, the others will follow, and so on and so forth. What I found over time was that by plotting these levels on the chart, when Bitcoin makes a high and starts coming down, there's a spring that happens. And that spring of how high can be measured by how many levels Fibonacci it retraces from a high. So let me explain. This made a high here. This was the last level we touched. We did not touch this level. When we came down from here, we've now touched one level. So this is 1. We came down again. This is 2. We went up. We didn't touch here. We kept going down. Kept going down. This is 3. kept going down. This is 4. Didn't touch this. Came up. Didn't touch this one, so we're still at 4. Came up, hit this one. Now we come down. This is 5. If you hit another level and come down, that adds another to the count. So we are at 5. We've moved up right here. So when we hit right here, we've done a total of 5, what I call Fibonacci retracements, down before moving up. So when we got here, we have 5 built up. Well, how high did we go? 1. So we hit here. When we hit it, that unlocks it. 1, 2, 3, 4, 5. 1, 2, 3, 4. Breaks it. Let me go to the next slide. So this is the part we were measuring right here. 1, 2, 3, 4. Then we break it. 1, 2, 3. And we hold right here. This was one level held as it went into the bear market, which keeps the market alive. The whole market knows this still has to be hit. So buying into here is okay. And as you're buying in here, you are stacking up to continually move up again to the next level. So over time, I've learned and kind of created my own theory of measuring these cycles based on the Fibonacci sequence starting from some of the lowest levels in history. Real quickly, we'll look at this. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Top of the market. This market cycle here, 1, 2, 3, 4, 5, 6, 1, 2, and this is the current market cycle that we're in. So this area right here, this is why nobody expected this to run early, and it didn't even run the whole market cycle. So when everybody's saying Bitcoin's running higher, it's absolutely running higher. Because now if we go forward, this is the level that's stunted. We have back over levels here. We've just been ranging here, and we're starting to pick up steam to finish out these levels that never got finished inside this market cycle because of the Fibonacci extension. So that is my analysis of Bitcoin and how you could have tracked and known the price movements ahead of time before they happened. Now we're going to move into XRP. So for XRP, I started off showing 2 different charts. The 2 different charts are XRP logarithmic or normal, and then XRP logarithmic. So this is normal. And the reason why I'm explaining to you this is because the way this chart looks is the way everybody feels. And what I mean by that is this space here and this space here, Fibonacci, this is the same as here. So if it's going to get to here, then you go from here to here. It's just as easy as it was from here to here. But people don't think that because they don't understand how Fibonacci works. So this space, when we get to here, going from here to here, is just as easy as it was going from here to here, and from here to here, and from here to here. So the regular view is what people feel and is what happens unless you look on it in a logarithmic way. So this is XRP logarithmically, how people feel when they look and when they hold it. and trade it. This is what it looks like when you put the levels on it that we know based on, see, I'm using these two levels and then I'm extending these all out. And so technically these graphs are exactly the same. All I did was change one to logarithmic. So that's the same lines here as it is there. They just look different when you mathematically separate it. XRP has been around a lot less time, so we're still in the early stages of this token. And again, one more time, just to flip back and forth between regular and logarithmic with the same levels. Here you can see as I scroll up, here you can see as I scroll up, these levels are the same spacing as these levels here when you look at them logarithmically. Now, this graph has a lot of drawings on it. Ignore them. We're just going to be talking about the levels. So again, this is XRP. So if we take this XRP market cycle, it doesn't touch this level. This is the last one it touched. So 1, 2, 3, 4, 5. You don't include when it hits the first two lines that you're measuring from, because that's where I got the measurements from. So we're at 5, 6, 7, 8, 9. It doesn't hit here if you zoom in. 10. Breaks it, so 1, so 9 left, but picks one more up, so back to 10. 9, 8, 7, 6, 7, 8, 9, 10, and it went more because it picked some up here, and I think it leaves 1. It really should have gone all the way up to here, so it still has 1 left over in this market cycle, but it does get the whole entire extension out all the way down here from less than a penny out to $2.96 by measuring the Fibonacci retracements that happened on the chart. So after all that, this is where we are today. This is XRP's current high that it's ever made. That's the last level that it touched. And then let's look at how many levels we have built up in manipulation over this last 4-year time period. We'll start from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we're at 12 right there. 13. Now let me move the chart. So this is where we were at 13 right here. Doesn't hit up here. 14. Excuse the mess in here. 15, 16, 17. So the market is pent up on XRP 17 Fibonacci levels as we've just been ranging in here. So here is the exciting part. We're sitting at this high. We've got 17 levels built up. And let's zoom out and see what those 17 levels would entail with the break of an all-time high. So we'll stop right there. So if this level is broken, this is the previous all-time high from back here. If this level is broken, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. It has the ability, with full extension hitting all levels. We've seen before, sometimes it doesn't go out a full level or two, but it could well hit over $1,000 based on the Fibonacci buildup that is in this chart right now. So this is just a very small, condensed view into what I see and how I'm measuring this volatility to get up into these price levels and why I'm holding XRP as an asset.